Hello everyone! Today we're going to talk about Bitcoin, which is trading at $112,313 and is basically moving sideways. In my previous video, I gave a similar analysis on the weekly time frame. I mentioned that within this large green candle, a sideways movement is possible, right? Which is limited below by the level of, let's say, $109,000 and above by $119,086. A $10,000 range of movement. Yes, that's possible. We have an intermediate level at 113,493 from the perspective of weekly candles. But now we erase everything and switch to the daily time frame, because here the situation is, let's say, fairly clear, although the only thing that's clear is that Bitcoin is once again in a sideways range. So according to formal indicators, what have we got here? According to formal indicators, we got a bearish engulfing pattern in this area, right? And we can only talk about a trend reversal when we see a bullish engulfing in return. It seems like that happened right here. Yes, here's a big green candle that engulfed two red ones at once. It closed above the 50-day moving average. But what do we see in the end? Stops. We always have to take this into account. The market is unpredictable or barely predictable. It can do whatever it wants. And here, the engulfing of that candle by three subsequent falling candles, and the decline continues. So now, in order to talk about any kind of reversal, we need to see an engulfing of this red candle, right? Now let's start drawing the levels. As I said, the situation is pretty simple and obvious, but let's try to break it down. Let's make them white. I like white ones better. So 112,566 is the base of the red candle. And as you can see, we've hit it with the candle's wick once, twice, 3, 4, 5 times. Even today we've tested this level, but we can't break through it. On top of that, you can see that we're trying either to break through or not break through the 100-day moving average. That's the red curve on the chart. So right now, it's a moment of truth. In order to talk about growth, and if there is any growth, it will most likely be toward the area of the 50-day moving average, which is currently around, let's mark it at some level, about 114,500. There you go. And then we'll have another question. This growth will continue if we break through the 50-day moving average. And even then, that's not a guarantee, but it would be the first sign. Or it could bounce off and then we'll head downward. So what are the important support levels below? Well, the important support levels below are where that big 3-day drop stopped. That level is $110,111. Notice that we've also tested this level to the downside many times and still haven't broken through. So essentially, Bitcoin is currently stuck in a range between 110 to 111 and 112,566. Accordingly, the technical target for growth is 114,656. Potentially, it could go even higher. From the perspective of weekly candles, as we saw, it could even reach 119. That's it. And as for the downside target, if we break through 110 to 111, then most likely, at the very least, that's the minimum target, right? We have this zone around $108,000, but that's not very significant. And more seriously, let's take a look at what kind of zone could be forming here. Well, judging by the daily candles, probably the lower boundary of this trading range, which I would mark somewhere around here, $102,790. Well, that's at the very least. By the way, if we just clear everything now, there are already a lot of levels marked. Let's mark a level here, right? So there was also a reversal point here. Notice that we're still trading within this level, so far above it. Yesterday or the day before it was below. So the situation is quite uncertain. But once again, I'm telling you that in order to speak with any confidence about growth, we need to see Bitcoin close on the daily candles above 112,566. And in order to at least somehow assume a continuation of the decline, we need to see Bitcoin close below 110 to 111, right? Accordingly, our targets are the levels of this consolidation area, 102,000. And the 200-day moving average runs roughly here as well. I don't want to make this video long. I'm just showing you what's on the chart. But I also have a second browser. That's Opera. So in Chrome, I have a markup here that I made many months ago. And look, according to this markup, we broke through the channel boundary and are now bouncing off it. That's this blue slanted line. Here, Here, the level of 112,566 is also marked. But it's basically the same chart. But this blue trend line indicates that if we do end up consolidating below it, then what scenario is possible? At some point, we will test the 50-day moving average somewhere in this area, around $115,000, and then we might head down. And if we follow this channel markup, then to the downside, we could end up either here at the lower boundary of the channel, which as you can see is you see $90,000 or somewhere in the middle. Well, the middle fits into this yellow level of $102,000, maybe $97,700, somewhere around there. So I would say that as long as we are not only below the 100-day, but also below the 50-day moving average, the priority is still downward. Why? Because an additional argument is this channel markup of mine. Take it however you want, but it works. And it indicates that we've settled in the lower channel and could move either to its middle or its base. So that's either $90,000 or 97 to 102. That's about it. Subscribe and leave your comments. Today, I'll try to record a video about the US stock market indices. Goodbye.